So the Federal Reserve meets the day this video is released, and here are the important parts that you need to know. So I'm here with a special guest today, Nick from our operations department. Nick, thanks for coming on today.
Thank you, Joe. I appreciate you having me.
Yeah. So Nick has had a lot of great questions about the Fed and some other things, and I thought it'd be best for him to come on the show to ask those questions. So happy to have you.
Yeah. Thank you, Joe. Yeah. Like you said, I am 24. I have a lot of friends, getting ready or buying houses now, and they know I'm in the business, in the industry. So they have a lot of questions for me, especially stuff like the Fed, like what is the Fed? Because it's kind of this voodoo, like top
Mystical
level government.
creature.
Yeah, exactly. Yeah. People don't actually know exactly what they do, but they have a lot of influence.
A lot of people don't know what they do, but the Fed is, basically, to put it shortly, the Fed is short for the Federal Reserve. And so the Fed is actually the U.S. central banking system.
Okay.
And they, what do? They make decisions they regulate financial markets, and they make decisions on things like interest rates and the rate at which people borrow money, and more importantly, the rate at which banks borrow money from them. And they're kind of a loan of last resorts for many banks.
Right. So like you mentioned, they're going to be having a meeting when this video is released.
Right.
So why does that matter? And what are they going to do during this meeting?
Great question. So a lot of eyes are on the Fed. All the financial markets watch what the Fed does. They give a lot of information, even though they give out only slight bits of info, very calculated. The info that they do release will move and can move markets. And so this meeting is particularly important because there's been, I think they had 11 rate increases in a row. 11 rate increases in a row,
wow,
which is unprecedented in 40 years. And so the markets, obviously interest rates are high, and their whole purpose of having these rate increases is, by their own admission, to destroy demand to help curb inflation. So if you've been to the store, you know that meat costs 30 to 40% more than it did a couple of years ago. Home prices have risen.
Right.
Gasoline costs, everything costs more, right? That's inflation. Your dollars don't go as far, and they want to make sure that doesn't get out of hand, because that hurts a lot of people. So at this particular meeting, it's already been baked in that, most traders, futures traders, they think that the rates are going to stay the same.
Okay. So most of the country is thinking the Fed is going to come out to this conclusion that the rates are going to stay the same. Now, what if they do something that is unexpected?
Oh, gosh. Okay. And that's the big question. Even though most people think that the Fed's going to keep the rate the same, there's a lot of information that came out in the last couple of weeks that it was conflicting to having the inflation become under control. And so the Fed could surprise everyone. There's three things they could do. They could raise the rate, they could lower the rate, or they could keep it the same. There's a couple of other tools that they have, like buying or selling assets that they have on their books that could change, things as well. But that one big tool of the cost of money. So if let's just say they decide that, okay, rates, the inflation is still a problem, we need to just hammer it home and do another rate increase. Right. It's going to throw markets into a turmoil. You'll see mortgage rates increase because it's a trailing indicator of the actual health of the economy and inflation. Right. So you'll see mortgage rates could go up. You'll see car payments go up. Prime rate will go up, which affects credit cards and HELOCs. You'll see the Dow Jones or the S&P 500 possibly go down. I'm not a financial advisor. This isn't financial advice,
right?
But that's what you could see. It would really roil or create turmoil in the financial markets if they do outside of what's expected.
Okay. And so in this case, since you did say there was some data that indicated that maybe an interest rate staying the same isn't in the cards, what would you say, what would your predictions be?
My prediction.
Do you think? That's the big question we came for.
Sure. So I would love to say I would agree with everyone out there that that rates are going to stay the same. It'd be better for mortgage rates and these things, but I will tell you there's conflicting data in the marketplace that suggests that maybe they send one more message to the economy saying, listen, before you all get too excited, you got to look at where the data is. And the data suggests that we still have a spending problem in this country. And the spending problem we have, you see debt going up, right? And at a higher rate, harder to pay back. You see government spending still increasing, even though they put the Fed on fixing inflation, they're still giving away money. And these things lead to inflation, and inflation is what they're trying to curb. So if the Fed really wanted to send a strong message to the market to say, listen, we're not done here, and we might do more raises, they might send this warning shot, or not even a warning shot. This is not a shot across the bow. This is a shot directly at the boat. And right. to stop, people from thinking, oh, they're almost done and they're just waiting to spend. No, they need to send they might think they need to send a message to raise and by raising the rates, they would do that. So my prediction, look, I'd love to go along with the 97% of people, but I'm going to do an outlier, at the risk. I could be wrong on this, but I'm in Florida. I'm like a weatherman, and
right.
they're never wrong.
Right.
So I'm going to say there's a slight chance that the Fed might shock us with a rate raise just to send that message. In likelihood, they're not. But there's a small part of me that says they're going to send another message out there.
Right. Something in your gut is like,
something's like,
something's
the
there.
numbers were a little mixed
exactly.
last week. Yeah, a lot of the data.
And a lot of what you said makes sense that, there could be a chance that is the case.
Sure.
But to wrap everything up, what would you say at this time to those looking to buy a home or sell a home at this current time?
Well, I think I hear a lot of objections out there that say things like, well, why would I sell a home that has a 3% interest rate and buy a home? And that's the crux of the problem right now. Home prices are still rising, okay? Despite higher interest rates, historically not that high, but higher interest rates, home prices still are rising in Florida especially. And across the country, they're down just a tad, but there's only because there's a couple markets bringing them down. But places like Florida, home prices are still rising because there's such a low inventory because people don't want to sell their homes. So if you need to buy a home, buy a home. Prices, I don't think, are going to go down in certain markets. Now, if you're in New York or California, we're seeing prices, or Illinois, we're seeing prices go down.
Right.
Different story, different story altogether. But in Florida, home prices are still rising. There's a lack of inventory. And if the Fed raises the rates again, well, that's going to be even better of a home buying opportunity. I'm not just saying this because we sell money. I'm looking at doing this myself for investment properties and things like that, because I think that the markets, if you look at it purely on a demographic, population numbers, populations aren't going down. Right. And in places like Florida, they're going up.
Right.
And there's not enough housing for everybody, and they can't build fast enough, inexpensively enough to really accommodate all those people buying. So if you need a home, you need a place to live. It's I hate saying this, but it's a great time to buy.
Right. Right. Especially on a Space Coast, we have a ton of people flooding into our area, and
we do.
So, yeah.
And that goes for a lot of places in Florida.
Right.
And people might be leaving the inner cities of Miami and maybe Orlando, but they're going to other places in Florida.
Yeah, absolutely.
So, well, cool. Yeah, so I appreciate the questions. Did I answer your questions?
Yeah, more than sufficient. Thank you, Joe.
Did I miss anything?
I don't think so.
Cool. Well, thank you all for joining us today. Be on the lookout for the Fed's announcement. If things go as planned and they don't change the rates, you're not going to see a huge impact to the markets because it's already been baked in what's going on there. But if they do something unexpected, like raise or lower, don't think they'll lower the rates. If they keep them the same, that's expected. If they raise them, you're going to see a bit of turmoil in the markets. You're going to see that unraveling before your eyes because everyone's thinking that's not going to happen. But you heard it here first. It could go up, but let's hope it doesn't. And that's all I got right now. Like, subscribe, share, give this to someone who you think might benefit from it, and we'll see you next time. Thanks for coming on, Nick.
Thank you.